client that called me and sent me a letter that he got from the city of Toronto. They told him they were going to sell his house. And I'm like, no, they can't do that. So I called up my lawyer, and lawyer goes, yes, they have the power to do that. Some countries like Canada, we have 28 different types of taxes. There is one that they can actually use against you and take your property. Welcome back to my channel. This is The Right Property, where I bring you information before deals. My name is Yemiadegorite. Thanks for joining me today. So what we're talking about today, taxes, wrecking taxes. I want you to take a moment and ask yourself, in the country I'm in, how many taxes are there for me to pay? Some countries have zero. Lucky for you. Some countries like Canada, we have 28 different types of taxes. Yes, 28. Across the board, all transactions, you're working, you're doing business, these taxes are all over the places. Taxes are compulsory, and taxes are not decided by you. They're levied against you by the government. Also remember, the more taxes the government puts on the people, the less power the people have as consumers, as in to spend. Yes, more taxes equals to less spending. How are Canadians making it? I have no clue. An average Canadian pays about 43 to 45% of their revenue. Yeah, their yearly revenue, 43 to 45% to the government in a year. So you make $100,000, you're paying $43,000 to the government. Don't ask me how Canadians are making it. I don't have a clue. But the one tax I want to talk about, it's under the real estate taxes. Okay? Under real estate taxes, we have 9 different taxes. This video is actually because I got a client that called me and sent me a letter that he got from the city of Toronto. They told him they were going to sell his house. And I'm like, no, they can't do that. So I called up my lawyer, and lawyer goes, yes, they have the power to do that. I was like, what? He's like, yeah, they usually give you a 3 years grace period, but they can actually sell your house. And then I went to do more research. And that's why I'm bringing you this video. If you're out there and you've been skipping on your property taxes, you got to watch this video to the end. All right? And if you're looking to buy and you're wondering what is a property tax, I'm also going to explain that. In fact, I'm going to run through the taxes all for real estate in this video, all the real estate taxes. Let's go right now. Land transfer tax. Every house bought and sold, the new buyers will always pay land transfer tax. Even if a house is sold 3 times in a year, every time it changes hands, the town gets a land transfer tax from the new owner. Yeah, doesn't matter how many times it gets sold in a year. Capital gains tax. You inherit a house. It's not called a death tax, but you inherit a house from a parent. You have to pay capital gains on the house. It's almost similar to the death tax in the US, but Canada doesn't call it that. And you also an investor. Every income property you have to pay land capital gains tax on those properties as you sell them. Speculation tax, vacancy tax. That's a new one. I think the city of Toronto started this one. If your house is empty, you have to register the house as vacant. It could be like a holiday getaway home for a family. For the period it's empty, you have to pay for that vacancy. It's a vacancy tax, okay? Foreign buyers, you pay taxes as a foreigner buying. There's a ban right now on foreign buyers, but if you're buying a commercial or residential, you have to pay foreign buyers tax. And when you're selling, you also have to pay extra tax as a foreigner for selling. Education or health tax, this is included in your property tax. Every property, commercial property, residential property, every property pays property tax. This includes the education part of it for the schools in your community. You are the ones supporting those schools. HST, GST. HST is really paid when you buy a new home from a builder, because the builder has to pay HST to the government. So you have to pay the builder, except you're buying the brand new home for your family to live in or for yourself to live in. All right. And then there's corporate tax. Corporations always buy properties all the time. That goes for them. So there are about 9 taxes on real estate. But the one I want us to focus on today is the property tax, because it leads to something called the property tax sale. All right? You do not pay your property tax. They get to sell your house under the property tax sale. I don't know if you've ever heard of this. They don't do it too often, but they have the power to do it. And this almost happened to me personally, because when I moved into my house, I discovered that the engineer that the city got to fix the sidewalk in front of my house actually raised the sidewalk higher than my driveway. So when rain falls, water flows backwards instead of flowing downwards to the street. I called the town. They sent someone over. They told me to do a grade. I got an engineer, a land survey guy. He came and he set the whole thing up, and it showed that the grading changed at the height of the sidewalk, and it's flowing backwards. So my sidewalk is like that, and this part flows to the street, and this part flows backwards into my house. So when rain falls, the water comes into my garage. I thought the town was going to fix it. But at the end, they told me, you know what? We believe your house is sinking. So you can go get a lawyer and sue us. I was so mad. I was like, what's going on here? Is this how this town is? And instead of me paying property taxes, I decided to cut them off and stop paying my property tax. It went on for like over a year. And one day I looked at the bill. I'm like, it's 7,000 plus. Let me go pay this thing. So I paid it off. Unknowingly for me, the town, after 1 year of me not paying, they could have put a lien against my house. So upon my research, this is the process they take in selling your house under property tax sale. They put a lien against your house. It's called the tax arrears certificate. They use that as a lien against your house. So if you're not sure what's going on, you want to go check if there's a lien against your house right now. If it's from the city, time is of the essence. You pay them what you owe them. Or they give you a deadline. After they put that lien on, they give you a deadline. And once that deadline passes, it's usually like a year, okay? They give you time. You can call them and arrange a payment method, okay? But they give you like a 1 year period as a deadline. And when that deadline actually passes, they can list your house on the MLS or auction your house out to the highest bidder. However, most towns gives you like a 3-year grace period. So that 3 years is for you to pay. It's not for you to accumulate more unpaid property tax. And mind you, they're also adding interest to whatever you hold them and also adding penalties to whatever you hold them. So at the end of the day, you're going to be paying them everything for them to take off the lien. If you haven't been paying your property tax, this is the time to go check your title. Make sure there's no lien on it, and then start paying off what you owe. Because this tax is almost the same thing as a foreclosure. When they sell your house, they're gonna sell it dirt cheap. And then the town takes their payment first. Not even your mortgage, not your lender, not the bank, or whoever loaned you money. The town takes their payment first, and then your mortgage lender gets whatever is left. If there is anything left after that, then you get whatever is left after that. Let me give you an idea of what I'm talking about. The highest property tax I've seen on a residential property is about $19,000. The house was listed for $2.6 million. Okay? It's a custom built house, $19,000. So let's approximate this to $20,000. So in a year, that person with the $2.6 million house refuses to pay $20,000, the town can put a lien on the house. In 3 years, say the person is still refusing to pay, so the person holds $60,000 plus interest plus penalties. Let's round it up to $80,000 or even $100,000. All right. The town can sell your house, your 2.6 million house, for the lack of you paying them $100,000. That is ridiculous. And this is why I call this tax a wrecking tax. It wrecks you. Because at the end of the day, you may not even get any change back after they finish paying for the procedures and the sale and everything. So, my friends out there, listen to me. Your property tax is a dangerous tax just waiting for the town to foreclose on you. If there's anyone out there that knows what I'm talking about and thinks I've missed one or two things, please leave a comment. If you like the video, please like it and share it and spread the word, because we all have to be aware of the sneaky taxes out there. We're aware of the major ones and we don't even like them. And then there is one that they can actually use against you and take your property. This is not fair, I know. And that's why I'm watching out for you, because all I want to do is see you at the top.